What's up, family? This is Julius Nyanda with Homeowner Help Radio, where we help you get and keep your financial house in order. You know what? Today's episode is actually a little cool because we got a chance to get out of the office a little bit.
This is a good thing to say to the lender. You want to hear it?
I'm here at a workshop.
If they're current, and again, we got our
Jenny
friends back there at Gill Mortgage who already told you they can work with your client.
Got a chance to sit down with a gentleman named David Compton. He has a workshop that I attended called Navigating the Maze of Short Sales, REOs, and Foreclosures. A lot of great information. He actually introduced himself.
Hello, my name is David Compton, and I am a partner in a company called Practical Resources. We are located in Carlsbad, California.
He had a message for sellers.
A seller looking to short sale your property, you need to really make sure to ask your lender, what is the process involved? And a question that you may want to ask your lender is, how many levels of approval will it require to be approved for a short sale? Because it may not just be the lender alone that may have to approve it. It may have to be an investor. And the other question that you may want to ask your lender is, what role is any mortgage insurance company going to have in the approval process? What's going to be the requirement on the part of the insurance company? So find that out ahead of time, and you also may want to find out from your lender what documentation that they're going to need from you so that they can go ahead and process the short sale. So that's a tip for you to look at and ask your lender about. And you may also want to get the assistance of a qualified real estate agent so they can help you go through this process.
And he had a message for buyers.
If you are a buyer on a short sale property, be aware that the process may take anywhere from 60 to 120 days or even longer than that. And again, you may want to go ahead and have your agent ask the listing agent what levels of approval are there going to be, similar to what you were if you were a seller. Like, is there going to have to be just lender approval? Will there have to be investor approval? Might there have to be a mortgage insurance company that may also have to approve the short sale? You may also want to ask about liens on the property. Make sure that any existing liens are properly researched so that your buyer knows what they're getting into. And another very important tip for a buyer is to make sure to have the property inspected, carefully inspected, to make sure to determine the condition of the property and what repairs will be necessary. Those are some tips which can really help you have a much better transaction and a much better end result. Thank you very much.
So I actually enjoyed a lot of it. I'm so grateful that he took the time to talk to us. Today's show is focused on those homeowners right now that are current on their mortgage but are looking to short sale. They've got a circumstance that justifies the reasoning for them buying a new property, and it also justifies the current lender giving them the opportunity to short sale their home. So we're focusing on that because I hear that coming up a lot, and I want to help those real estate agents out there and those homeowners out there that are dealing with this situation to try to get a mortgage professional involved as early in the process as possible. So check out these slides, and I'll see you on the other side.
Let's get into the slide presentation portion of today's show. This is episode 5, Short Sale for Borrowers Who Are Current on Their Mortgage. This is part of the Program and Guidelines series, where we give you insight into how the underwriter evaluates whether or not to give you a loan. Let's talk about the lending landscape real quickly. So you've got loan type, description, and who buys the loan, as we discussed in episode 4. There are 3 major types of borrowers: government, government-sponsored, as in Fannie and Freddie, and then you also have the private sector, which pretty much got out of the game after 2006. On the government side, you've got FHA and VA. FHA allows up to 96.5% financing, that's basically 3.5% down, and they have monthly mortgage insurance that you pay for going above 80%. VA is for veterans. They get up to 100% financing to buy a home, and they pay a funding fee at closing. On the conventional side, you have a USDA program that's special and specific for areas that are considered rural, and you also have income limitations. The most common loan on the conventional side is the A-paper loan. 417, good credit, low debt, 20% down, good income to debt ratio. You also have the private sector, which had Alt-A and subprime, which no longer exists. So again, I always leave that out there because at some point private sector is going to come back, but for now they don't exist. This is what our lending landscape looks like right now. So what I'm talking about today is short sales. Short sales are really the transaction where you're selling the property for less than what you owe on your mortgage. When we look at the rules regarding short sale, government, as in FHA, you are not eligible for a loan if you took advantage of the market. But if it's determined that you're not taking advantage of the market and you have a legitimate reason to sell your home, then if you're current 12 months prior to the short sale, you weren't late on your mortgage or any installment debt, they will allow you to buy right away. The other thing is, if you're in default, you're not eligible to get a loan for up to 3 years. On the conventional side, you've got a various set of rules, and they are all basically lumping the different types of transactions together. And that's deed in lieu of foreclosure, where you hand over the keys to the bank. You pretty much are foreclosing on your property voluntarily. And then you have pre-foreclosure sale, which is where you allow yourself to fall 90 days behind on your mortgage, where the lender is then filing for foreclosure, but you sell right before the bank forecloses on you. And then lastly, you have your short sale, which is selling for less than what you owe on the property. For regular standard guidelines on conventional, you got to wait 2 years if you are willing to put 20% down. You have to wait 4 years if you can put 10% down. And if you wait 7 years, you're under normal guidelines. If you have extenuating circumstances, conventional financing, which is Fannie and Freddie Mac loans, will allow you to wait 2 years, and then you have to put 10% down. So that's the short sale rules as it stands. What we're focusing on today is going to be the FHA, because they're the only ones that allow you to purchase right after you do a short sale. So short sale and being current, let's talk about that real quick. Because when you look at on a mortgage and you're trying to get a short sale approved by the bank, what they pretty much want to know is that you have a qualified hardship. What's a qualified hardship? One would be like a death in the family or death of a wage earning spouse, somebody that affects how that mortgage is being paid. The other is a major illness that prevents you from being able to pay your mortgage. So those are the two types of qualified hardships that fall in one category. There's another kind, which is a sudden growth in family, meaning let's say you're a godparent or your close sister passes away and you inherit 2 or 3 kids. Well, then you have a sudden growth in family and you have pretty much a family hardship as well. That's a circumstance where you can probably stay current on your mortgage and still get the bank to approve it, and at the same time, that's a justifiable reason to buy another property. So I want to really focus on sudden growth in family, because that's really the circumstance that many of you should be under if you're looking at selling the property that you're in and buying right away. Sudden growth in family allows us to see as a lender that some circumstance happened that, one, created a financial hardship, but at the same time also gave you a need to purchase a home that was larger in size. So if you have this qualified hardship, on the one side, your existing lender, the current lender that you have right now, if you package that and you put that together well, and this is one of the reasons, then you should be able to get your short sale approved. Now, there's nobody out there that can tell you that this is how it's going to be done. All they can tell you is how it should be done. Depending on the investor who owns your mortgage, depending on the guidelines that your servicer is following and their relationship and service agreement with that investor, all of that fits in to whether or not you get approved for a short sale. So I'm not saying that this is a one-size-fits-all solution, but I'm telling you that if you have a valid hardship on the financial side and you have a growth in family, that's the mix that is going to allow you to sell your property while still being current on your mortgage and possibly get your short sale approved. And at the same time, when you close that sale, you can then qualify to purchase a new home and you were current on your mortgage through this process. So again, sudden growth in family, using this exception, we're assuming that your mortgage is current the whole time. But because of your reasoning, your current bank's willing to allow you to short sell the property, and the new lender is going to allow you to buy a new home. Now, when you think about this circumstance where you've got the current bank that you're trying to work with on the short sale, and you've got the new bank you're trying to work with on the purchase, this is why you want to get a mortgage consultant in the game or mortgage loan officer in the game as soon as possible so you can start to plan ahead. So the party notes I want to leave you with: 1, with extenuating circumstances, lenders are more willing to allow a short sale for a homeowner who is current on their mortgage. Certain circumstances, like growth in family, allow you to purchase again right away. Consult a mortgage professional when considering the sale purchase scenario. Make sure you get that person involved early in the process so that they can sit down with you and help you figure out what's the best move. Now, as always, I want to stress, please support the show. We're trying to bring you different episodes with more information that's hopefully helpful to you. Go to the website, helpradio1.com. Hit the help button, Let us know your thoughts and feedback. Become a fan on Facebook or become a follower on Twitter, or do all three. We would love to hear from you. We want to bring you different topics every night. Thank you so much for listening.
So I hope you got some great information on today's slides. As we said on our last slide, you better support this show. We're looking at you to become Facebook fans, Twitter followers. Hit us up on the website. We want people out there to really support this show because we're bringing you free information about topics that are relevant for anybody out there looking to buy a home, refinance home, or do anything on the mortgage. So, as we always say, Homeowner Help Radio, helping you get and keep your financial house in order. Have a great